Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 8th day of October, 2014, and this is the daily report for gold and silver. Very, very strong showing across the board in the precious metals today with the dollar trading lower, equities markets back on fire following the release of FOMC meeting minutes this morning. We currently have gold trading up on the highs, up about $15 on the day, $1223.70. That is our high of the day, the low $1205.20 on the day. Silver also climbing in tandem, actually up 1.45% on the day or 25 cents. Current print on the screen 1742. Low 1745 just off the highs, and the low today 1707. More on silver in a little bit. Interesting day developing in the market. Of course, the big news, the release of the FOMC meetings. Patience is a virtue. In other words, the thought or the belief right now is that there will probably be more stimulus ahead. And with stimulus, of course, comes a very, very hard pull on the dollar. Let's take a look at our daily chart of the dollar. And as you can see, we hit this top right around 87, just shy of 87. And over the last 3 trading days, you can see that we've had this market have 3 red candles, meaning lower closes on the day. And today, as well as 2 days ago, substantially lower closing as we approach the mid 85 point, 85.37. Now, of course, at the same time, what that is going to do is with stimulus still in the picture, that is going to genuinely affect the equities markets, and those are up more than they were down over the last couple of days. You can see on this daily chart, we've basically taken back the ground that was given up 1961 on the S&P minis. And here's what I find interesting. We talked a little bit about this the other day. If we, and again, this is just a very, very crude line, but if we take a look at in essence, the channel that the equities have been tracking in, we talked about the fact the other day that they're really defined by trading within this channel. And one of the things I believe I mentioned was that we would probably see the market go and test right in this area. It came a little bit lower, and in fact, by any stretch of the imagination, even if we follow this line up, that would be the only way we could stay within the channel, would be off of this low here and this low here. These lows that came in back last year, November, and then this year again in February, mid-February. You can see that once again we tracked up near the top of this channel, tracked down near the bottom, and now are headed back up. So what we're really seeing in the equities markets more than anything else is periods of elongated rallies followed by very, very shallow retracements. We're not getting that retracement that most people are looking for, that 10% correction. Rather, we're getting these small releases of energy, so to speak, all the way up as this market goes up. And to me, that's truly a healthy market because you are getting the sell-offs that are required to kind of let that steam go, so to speak, release the steam in that pressure cooker before heading to higher grounds. So most importantly, how does this most recent market activity affect gold? And most importantly, our current position in gold. If you recall, it was just about a week ago we were short this market. We were short roughly at 21. As the market came down, we kept lowering our stops. We got out, I believe, somewhere at around 1206. We re-entered the market on the long side, of course, at 1208. So a couple of dollars between getting out of our short and going into our long. And then we have really talked about our strategies or our targets. Our first target has actually just been hit, and that is the 23% retracement level at 1222. So my sense is that if we get an effective close and have this market find support in this area or above, our current target right now has got to be the 38% retracement level, which is 1246. However, there's a big caveat with that. Before we get to that point, right before we get to that, I think this is at around 41, we have this bottom, and this bottom could easily, on a technical basis, cause a little bit of resistance in the market. So in terms of where we're looking to pull profits on this particular position, we haven't moved our stop yet. and I wanted to see how the market would react as we have the FOMC meetings minutes released. We did get that bullish spike that we were hoping for, and now, as far as I'm concerned, anywhere between, call it 1245 and 1241, that's our real current target right now in terms of where I think we could see gold travel to. Now, have we seen a defined turnaround? Well, I have to tell you this, there is no straightforward technical evidence of that fact. The first thing we would have to see to be able to ascertain that we're back in a bull market, and I personally don't think that that's what we're going to see, but we'd have to start trading above these lows. More importantly, we'd have to start taking out these highs, because when you consider what we have seen in this market, we've pointed out the fact that we had a series of lower highs, and then we had a series of lower lows. As long as we're getting lower highs and lower lows, we've got a market that's moving down. So even with these moves up, I still believe in terms of technical evidence that we're looking at a counter trend to the overall bearish trend. And then lastly, what we've been talking about has really been our short-term view in the market, and I wanted to spend just a second and reevaluate our long-term view to see if that's changed. We talked about the fact that when we had this record high, as this market came down, we had a series of descending tops. Those descending tops were also witnessing what's called a flat bottom, in which we had this triple bottom here. The market then came up, and this is what I believe. I believe that this was a turning point within the market, because once it hit this triple top here, we basically had a failed impulse phase come into the market, and that's when we went into a bear market, this certainly being one of the most bearish moves we've witnessed in the market, in which, when we consider the real drop is from about 1,800 down to 1,200, a $600 drop in the market, that's quite substantial. And then once again, we've got these descending tops. We also have a flat bottom. And so my sense is that if we get a little clip up in this area here, if it does break through this level right here, call it 1180, that's going to signal dramatically lower pricing. And so that's what we want to be cautious from on any kind of a long position in the market, is whether or not we head back into this territory. If we don't, there are various bullish models we can pull together, but they really can't come and play first until we take out this particular low. You can see that right here. That's the one at about 41 or so, and then these series of tops. If we begin to come close to these tops and actually break above this upper resistance line that will come into play, well, that would signal a bullish model that we would have to implement. Until then, though, we have to be under the basic belief that what we're witnessing is probably a counter trend, this trend up, a counter trend to the bullish or the bearish sentiment that exists overall within the market. And then lastly, silver. We do have an update. However, as many, if not all of my followers know, I've not been bullish on silver. When we go and we compress this chart, we're still in that area in which we've got to begin to see some effective closes. And we're still just right at the area, about 1740. Historically speaking, we've got this area right before it takes off. So we have seen this price point become a kind of a jump board for higher pricing. I'm not convinced that's what we're going to see. But for now, let's maintain our current long position in gold. That's doing very well from us. We are sidelined on silver, and I recommend that we continue that way. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.